Welcome to the Deep Dive. We're digging into Dell Technologies' latest financial results today.
That's right, the first quarter numbers for their fiscal year 2026. We've got the official press release and a performance review doc, both dated May 29th, 2025.
And our goal here is, well, to cut through the usual corporate speak and all the numbers in these documents.
Yeah, pull out the key insights, the important bits, so you can get a really clear picture of how Dell's doing and, what it might mean.
Think of it as your quick guide to understanding these updates.
Exactly. We'll explore them together, figure out what really matters.
All right, let's get into it. First quarter ended May 2nd, 2025. What are the big headline numbers?
Okay, so total revenue came in at $23.4 billion for Q1.
$23.4 billion. How does that compare?
That's up 5% compared to the same quarter last year, so solid growth on the top line.
Okay, 5% revenue growth. And profitability, how did that look?
Well, operating income was $1.2 billion using GAAP standards.
GAAP, right, the standard accounting rules.
Exactly. And that $1.2 billion was up 21% year over year, which is pretty strong.
21% is a good jump. What about non-GAAP?
On a non-GAAP basis, which, adjusts for certain items, operating income was $1.7 billion. That was up 10%.
Got it. So both positive, just different growth rates depending on how you slice it, and earnings per share, EPS.
Diluted EPS, on a GAAP basis, it was $1.37. That was actually flat compared to last year.
Flat year over year for GAAP EPS.
Okay, but the non-GAAP diluted EPS, that showed a nice increase. It hit $1.55, up 17%.
Okay, so non-GAAP EPS growing faster than revenue, it seems. The CFO, Yvonne McGill, she highlighted a few things.
Yes, she did. According to the release, she pointed out that all their core businesses grew this quarter.
All of them, okay.
And she mentioned that non-GAAP EPS growth at 17% was 3 times faster than the revenue growth. That suggests, better margins or efficiency kicking in.
3 times faster. Interesting. Anything else?
Oh, yeah, big numbers on cash flow. Record Q1 cash flow from operations, $2.8 billion.
$2.8 billion in cash from ops. For Q1.
For Q1, yeah.
Yeah.
A record. And they also returned a record amount to shareholders, $2.4 billion just in the first quarter.
Wow. Record cash flow and record capital return. That definitely signals confidence.
It does. And the COO, Jeff Clark, he seemed really focused on one particular area.
Let me guess. AI.
You got it. He specifically mentioned record Q1 revenue for their servers and networking business.
How much was that?
$6.3 billion. And he used the phrase unprecedented demand for our AI-optimized servers. That seems to be the real engine right now.
Unprecedented demand. Okay, that sounds like where we need to dive deeper. That's the Infrastructure Solutions Group, right? ISG?
Exactly. Servers, networking, storage, it all lives under ISG.
So how did ISG do overall in Q1?
Really well. Total revenue for the segment was $10.3 billion.
Okay, $10.3 billion.
Growth rate.
Strong growth. Up 12% compared to last year.
12% for ISG, and the breakdown within that, servers and networking versus storage. So servers and networking, that was the star performer we just mentioned, hit that record $6.3 billion.
Right, the $6.3 billion. And the growth there.
Up 16%. Storage also did pretty well, contributing $4 billion in revenue.
And storage growth.
That was up a solid 6%.
Okay, so strong growth across ISG, but really driven by servers and networking. What about the profitability of ISG?
That's where it gets even more interesting. The operating income for ISG jumped 36% year over year.
36%. Wow.
Yeah, it hit $1 billion. And what that means is their operating income margin, profit as a percentage of revenue, went up nicely.
From what to what?
It went from 8.0% last year up to 9.7% this quarter.
Nearly 10% margin for ISG. That's a significant improvement. Suggests they're selling more profitable stuff, right? Like those AI servers.
Exactly. It points towards a richer product mix, maybe better cost control, or just strong pricing power because demand is so high, especially for AI. And the sources, well, they really double down on that AI server story. Some numbers are just eye-popping.
Like the orders number, I saw something about $12.1 billion.
That's the one. $12.1 billion in AI server orders. Just in Q1.
Just in 3 months. How does that compare?
Get this. The sources explicitly say that single quarter's orders surpassed the total value of AI servers they shipped in all of last fiscal year, FY25.
Wait, surpasses all of last year's shipments in just one quarter's orders?
Yeah, it's not just growth. It's, like an explosion in demand packed into Q1.
Okay, that's massive. So what does that huge influx of orders mean for them right now? Like Backlog.
It means a huge backlog. They ended Q1 with a $14.4 billion backlog specifically for AI servers.
14.4 billion. So these are confirmed orders they need to build and deliver.
Exactly. It gives them really strong visibility into revenue for that part of the business for, the next few quarters at least.
But handling that kind of demand, it's not just about having the servers themselves, is it? They mention other capabilities.
Right. You need the whole ecosystem. Dell emphasizes things like their deployment and installation services, their managed services, to help keep these complex AI setups running.
And financing, presumably. These
Yeah.
are big investments.
And financing, yeah. They position it as an end-to-end solution.
Huh.
It's the services and support wrapped around the hardware that lets them actually land and fulfill these massive deals.
Did they mention specific products driving this, like specific server models?
They did. Things like their XE9680L, the XE9712, using the latest NVIDIA tech, like the GB300 NVL72.
And Project Lightning, what was that?
Yeah, Project Lightning. They're pitching that as potentially the world's fastest parallel file system for AI, aiming for double the throughput of competitors.
So storage innovation alongside the compute power.
Exactly. And they also mentioned managed services for the Dell AI Factory with NVIDIA. It shows they're focusing on these pre-integrated, easier-to-deploy solutions, trying to differentiate.
And they seem pretty confident about their market position in ISG overall.
Oh, yeah, they list a bunch of #1 spots. #1 in servers overall by 86, mainstream servers.
And storage.
#1 in a ton of storage categories, too. Things like all-flash array RAID, AI-centric storage, external RAID, enterprise storage. The list goes on. It basically reinforces their position as a major player in this whole infrastructure build-out.
Okay, so ISG, definitely riding a huge AI wave, driving growth, driving profitability. Let's switch gears. The other big piece is the Client Solutions Group, CSG. That's PCS, right?
Right, commercial and consumer PCs. And CSG also grew in Q1. Total revenue was $12.5 billion.
12.5 billion. And the growth rate there?
Up 5% year over year. Same as the overall company growth rate, actually.
Okay, 5% for CSG. Was that spread evenly between business customers and consumers?
No, not really. The commercial side was the strong point. Commercial client revenue hit $11.0.
11 billion. And growth.
Up a healthy 9%.
Yeah, okay.
And they noted this is the 5th quarter in a row they've seen year-over-year demand growth in commercial PCs.
5th straight quarter of commercial growth. That's a trend. What about consumer?
Consumer was weaker. Revenue there was $1.5 billion, which was down 19%.
Down 19%. Okay, quite a contrast. So businesses are buying, individuals may be holding back. What's behind that steady, careful growth?
Dell sees clear signs of a PC refresh cycle starting for businesses.
The upgrade cycle. Windows 11, maybe? AI PCs?
Exactly. Upgrades to Windows 11, and importantly, many of these are the new AI PCs. They mentioned demand was strongest in North America, but EMEA and APJ also saw double-digit growth.
And across different business sizes?
Yep, double-digit growth across small, medium, and large enterprise. So pretty broad based on the commercial side.
Okay, strong commercial story. But profitability in CSG, I thought I saw that went down.
You did. That's an interesting counterpoint.
Yep.
Operating income for CSG was $653 million, down 16% year over year.
16% down, even though revenue was up 5%.
Right. So the operating margin for CSG actually dipped, went from 6.5% last year down to 5.2% this quarter.
Why would that be? Revenue's up, but margin's down.
Well, Dell's strategy in PCs is to focus on the higher value segments, right? Commercial, workstations, high-end consumer, gaming.
Yeah.
The more profitable areas.
Okay.
So even with overall revenue growth, maybe component cost went up, or there was more competitive pricing pressure, or perhaps R&D costs for these new AI PCs are impacting margins short term. That could explain the dip.
And they talked about TRU? What's that?
TRU, total revenue per unit. Basically, their average selling price per device. They highlighted that their TRU is much higher than competitors, nearly double some select ones, they claim. And importantly, their TRU is growing faster than the market average.
So selling fewer, maybe, but more expensive, higher value machines supports that strategy focus.
Exactly. It suggests they're succeeding in selling that richer mix of products within their target segments.
And they're positioning themselves as leaders in AI PCs specifically.
Very much so. They claim to be the #1 commercial AI PC brand over the last year. They emphasize offering Choice 2 processors from Intel, AMD, and Qualcomm.
Mention specific product lines.
Yeah, things like their Pro Max Plus notebooks and workstations, highlighting features like battery life, graphics, and obviously the on-device AI capability.
And like ISG, they listed market leadership spots for CSG.
Yep. Number one in commercial PCs in North America, including workstations. Number one in workstations globally. Number one in North America desktops. Also, hashtag one in high-end gaming PCs, over $1,500, and hashtag one in PC monitors.
Okay, so reinforcing strength in those key higher value client areas.
Right. So CSG's story is strong commercial growth, driven by refresh cycles and AI PCs, strategic focus on profitable niches, even if the overall segment margin took a bit of a hit this quarter.
Got it. So, moving beyond the segments, let's talk about Dell's overall financial health. Cash flow came up earlier.
Yeah, let's circle back to that. The cash flow numbers were really strong.
Record Q1, right? $2.8 billion from operations.
Exactly. $2.8 billion in cash from ops. That's up a massive 168% compared to last year.
168% increase.
Yeah. And their adjusted free cash flow, which is basically cash from ops minus capital spending, plus some adjustments, that was $2.2 billion.
And the growth
An
rate.
even bigger jump, up 258% year over year.
Yeah.
Generating that kind of cash is, well, it's a very healthy sign.
Definitely. And they're putting a lot of that cash back into shareholders' hands.
A huge amount. That record $2.4 billion return in Q1 we mentioned, that breaks down into $1.98 billion in share buybacks.
Okay, nearly $2 billion buying back stock.
And $396 million paid out as dividends. They noted this $2.4 billion total is more than double their average quarterly return since they started this capital return program back in FY23.
So really accelerating the returns, does this fit with their long-term plan?
It does. Their stated target is returning 80% or more of their adjusted free cash flow to shareholders.
And they're bumping up the dividend too.
Yep. They raised the annual dividend for this fiscal year, FY26, by about 18%. It's now $2.10 per share. And they're targeting 10% or more annual dividend growth all the way through fiscal 28.
Okay, strong commitment to returning cash. Did the sources mention any, housekeeping items? Operational notes?
Just a couple of quick things. The results from the VMware spinoff are now reported separately under corporate and other, except for Dell's ongoing VMware resale business.
Makes sense.
And they also mentioned some revisions to prior financial statements. It related to supplier credits in the CSG segment. Basically, they corrected an overstatement of cost of goods sold in past periods to ensure the historical numbers are accurate. Just a reporting adjustment.
Okay, good to know. So that covers Q1. What about the outlook? What guidance did Dell give for Q2 and the full year?
All right, looking ahead, for the second quarter ending August 1st, they expect revenue between $28.5 billion and $29.5 billion.
Okay, what's the midpoint there?
Midpoint is $29.0 billion, and that would be up 16% year over year.
16% growth expected in Q2. That's a big acceleration from Q1's 5%.
It is. Suggests that AI server momentum is really expected to kick in on the delivery side.
And Q2 EPS guidance.
GAAP diluted EPS expected around $1.85 at the midpoint, up 50%. Non-GAAP diluted EPS guided at $2.25. That's up 15%.
Okay, strong Q2 expected. What about the full fiscal year 26?
For the full year, ending next January, they're guiding revenue between $101.0 billion and $105.0 billion.
Midpoint.
Midpoint, $103.0 billion. That represents about 8% growth year over year for the full year.
8% growth for the year. And full year EPS.
Full year GAAP diluted EPS expected at $7.99 midpoint, up 25%. And non-GAAP diluted EPS is guided at $9.40 midpoint, which is a 15% increase year over year.
15% non-GAAP EPS growth for the year. Did they say which segment drives most of that 8% revenue growth?
They did. They expect ISG, the infrastructure group, to grow in the high teens for the full year.
High teens for ISG. Driven by?
Driven specifically by over $15 billion of expected AI server shipments this year.
$15 billion in AI server shipments alone.
Yeah.
Wow.
Meanwhile, CSG, the PC side, is expected to grow in the low to mid-single digits for the full year.
Oh.
Put ISG and CSG together, they expect about 10% growth combined. They also mentioned they expect non-GAAP operating expenses to be down slightly and non-GAAP operating income to be up around 9% for the full year.
So that AI server story isn't just about Q1 orders. It's really baked into their forecast for accelerating growth and profitability for the entire year.
It seems to be the dominant narrative, yes, building on that massive backlog. And the sources kind of wrap up by reiterating Dell's longer-term goals and strengths.
Right, their overall financial model targets.
Yeah, the long-term framework.
Hey.
Aiming for 3-4% revenue growth annually, 8% or more non-GAAP EPS growth, converting over 100% of net income to adjusted free cash flow.
And the shareholder returns.
Still targeting returning 80% plus of that adjusted free cash flow and that 10% plus annual dividend growth through FY28.
And they tie this back to their competitive advantages.
Right. They highlight things like their global services reach, their massive go-to-market engine direct sales, plus partners the supply chain efficiency, and that broad portfolio where they hold #1 spots in client, peripherals, servers, and storage.
And they pointed to their track record on EPS growth.
Yeah, they mentioned a 14% compound annual growth rate, CAGR, for non-GAAP diluted EPS from fiscal 21 through this year's estimate, showing, a history of delivering profit growth per share.
Okay, this has been a really insightful look into Dell's Q1. Let's try to quickly recap the main takeaways from these sources.
Sure. Strong start to FY26, clearly. The biggest driver is that massive surge in demand and orders for AI servers within ISG.
Creating that huge $14.4 billion backlog.
Exactly. Meanwhile, the PC business, CSG, saw good growth overall, really pushed by commercial demand and the start of an AI PC refresh, even though the consumer side was weak and margins dipped slightly.
And all this translated into really strong cash flow.
Exceptionally strong. Record Q1 cash flow, record returns to shareholders, and a significant dividend increase. Plus, pretty optimistic guidance for accelerated growth ahead, fueled by that AI demand.
It really paints a picture of a company capitalizing significantly on this huge AI infrastructure build-out while still holding ground in its core commercial markets.
Absolutely. The speed and scale of that AI impact is just remarkable.
It really makes you think, doesn't it? When you see numbers like $12.1 billion in AI server orders in one quarter more than all of last year's shipments, and that $14.4 billion backlog, you have to wonder, how is this unprecedented AI infrastructure demand going to reshape things?
Not just Dell's business, you mean?
Yeah, beyond Dell. How might it reshape the entire tech landscape, the competition, maybe even the fundamental structure of IT over the next few years? And what could that kind of massive shift mean for you, for how businesses think about their tech spending, or even where the next big opportunities might emerge in the tech world?
That's a really interesting question to ponder given the scale of investment we're seeing.
Definitely something to think about. And that wraps up our deep dive for today.